Hello everyone, welcome back to Lab4crypto. The market is in chaos because of the tariff wars. There is uncertainty in the global economy, but especially to the US economy, and that is reflected on the stocks. The stocks are taking a beating for the past couple of days. And the surprising thing is that Bitcoin is holding very well. Of course, for me, it was not surprising because I'm used to do the analysis on Bitcoin basically daily. But I will explain why this weekend is so important for Bitcoin, and it will show us where Bitcoin is headed in the short term, and also that our target, which is values above 180K by the end of year and the beginning of the next one, are achievable. Of course, is not financial advice, is what I think and how I navigate the market. First, I want to explain what happened with tariff wars very quickly and tell you exactly what is the important stuff that you need to monitor, and do not watch countless videos and posts around tariffs, because I'm going to give you exactly what you need to know. So for people that they don't know, basically the White House published this table, these tables that you will see on their official White House Twitter post. But the main idea is that they imposed these tariffs around the world with the yellow column. And the other column, which is with blue and white, is what US thinks that the other countries are charging them. Now you'll tell me that that is fair, right? If China, for example, is imposing 67% tariff to the US, and the US only did half of it, that is fair. The point is that these numbers are made up, are not actually the tariffs that these countries are imposing to the US. And these numbers have came up using this equation. So what the US did, they said, okay, we are importing this amount from China. China is importing from us this amount. So therefore, there is a deficit. So they took this deficit and then they divide that by 2, and we have this 34% number. So US is importing from China goods where their value, for example, is 433.8 billion. China is importing from the US this amount, and this is where this number it came from before, because if you divide these two numbers, you will see that it's 67%, and then if you divide by 2, is this value. So this is how this number is generated, and where there is no trade deficit actually, and this is an example with the UK, where the US actually is exporting more to the UK that actually imports. So that means the US is making more money from the UK. They actually also impose 10% tariff. So initially for me, it became clear that they didn't want to do high level of math and calculations for the trade deficits, for the tariffs. They just wanted to send a message that they want a better deal, because this is true. The US has big trade deficits with other countries and major economies like China, Europe, and so on. And initially I thought that, okay, they put these huge numbers there. They didn't check very deeply if they have a deficit with a country or no. And also they said that this is reciprocal, and we had Israel removing completely the tariffs from the US goods, and actually still the US put tariff on them. And that made me think that the president wanted to use what he's famous for, the negotiation part. So he always want to make a great deal for the US. So he was going to use these numbers to go to the table with his trading partners, basically. Though things didn't come that good. And we already saw that, I have my tweet, I think that, yeah, China put a 34% tariff, so it retaliate back to the US. And that it was an escalation to the tariff war. That, of course, what it resulted for Bitcoin to go from 85, 86K that was this morning back to the 81.5. But again, Bitcoin is holding very, very well. And if we go, for example, to, let's check, for example, let's do that together. Nike stock price. Yeah. You will see Nike basically is 35% down. It got a bit hit because most of their manufacturing is done in China and Vietnam. And these countries had a huge amount of tariffs. And even if we check Apple as well, because they're making their phones there, they got big hit. Yeah, you see 12% down in a month, 15.6, and so on. My point is that the US stock market is taking a beating because they are reliant to this trade connection that they had with other countries. And now I will move to the good part, which is basically the US Treasury Secretary, this guy, Scott Bessent, said that he wants the US Fed rates to go down. And the reason that he wants the rates to go down is because he knows that the US cannot pay the debt that it has to the world. So what happened? Usually, a country, when they want money, they issue bonds, treasury bills, and what that does, another countries come and give money to the country with a certain period, for example, let's say 10 years. So I give 1 million to the US, but they give me my money back, let's say, when there is an expiration with an interest. When I don't have the money, actually, what I'm going to do, I'm going to issue again new treasury bills, which people are going to buy, and I'm going to pay the people that I own the money with an extra debt. So when you do that, you want the rates to go down. So you want this number to go down because when you are going to issue the new treasury bills, you want to pay as much less interest as possible. So when you do that, and your job is to be the United States Secretary of Treasury, that is very good news for you because you manage to roll over the debt at a cheaper price. That also now it's good for the markets as well because we have an injection of liquidity into the markets. So we have the Fed rates uh, going down, which means companies are going to be able to borrow from banks cheaper. The mortgage rates are going to go down as well. And that is generally helpful for the economy when there is no fear of recession, of course. I think the US economy in the current state, and let's say remove the 2 days of the tariff wars, it's in a really good position. The unemployment rate is really low. And the Fed, you'll see that are reluctant to cut rates because they say the economy is doing well. There's no point for us to cut too soon and therefore to not tame inflation. If we go to a post that I made before I started recording the video, I said that the US unemployment rate that it released today, it showed that it came 0.1% higher than expected. And that is good news because the Fed are, are going to have more incentive to cut rates because you want to catch, let's say, the unemployment of going up at the right time, because when you lower interest rates, you will allow companies, as I said, to borrow easier and therefore rehire people back and try to make new startups whatsoever. And initially, when the tariff wars happened, I posted this, which basically the prediction market was saying that the Fed are going to have 3 rate cuts this year, not 2. That was the projection of the Fed. And today, even after the crash, this number is now 4. So the market is expecting a full 100 basis points reduction in the interest rates. So that is good for risky assets in general. And Bitcoin is in a unique spot because it's a tech, but also store of value for now. And that is why it's holding very well. You will see that Bitcoin, for example, dropped. Actually, it's up today, for example. But if you go and check the S&P 500, I'm now, without checking that, probably is down. Let's see together. Yes, it's, and you see how Bitcoin is decoupling from S&P, from Nasdaq as well, which Nasdaq we used to be really correlated, and now we're starting to decouple. So for me, I always said to our premium channel and people that they want to follow my thoughts and what I'm doing with my portfolio is that having Bitcoin holding the 80K value with all this uncertainty up until today, which was the unemployment rate, it was very good news. And especially on the weekend where we see what the whales are going to do. If they're going to push the price a bit higher, it's going to be even more amazing news. Because don't forget, next week we'll have the, no, in 10 days, I think, yeah, 11, it's the end of the tax year in the US. It's 15th of April. So everyone will have their taxes sorted out, and therefore the new year is starting. And with all this trend that Bitcoin showed, and with all this uncertainty in the market, I think Bitcoin is going to be a place where people, they want to deploy some capital. Of course, it's not financial advice, but also this is something that Larry Fink said. So Larry Fink, on his annual letter, he said that when there are geopolitical tensions and where there's recession fears, Bitcoin uh, Bitcoin will be in an environment which will be able to thrive, because when you have these two combined, Bitcoin is an asset that is not affected by tariffs. You can move it in an instant at the speed of light, as many times that um, Michael Saylor says, and you are shielded from this uncertainty. So we are in a good position, and that is reflected on Bitcoin price. We are holding the very, very well compared to the market. Already I have posted also that Bitcoin compared to gold is in a position, is in the -2 standard deviation line, which what it means, we are in a place that also will allow to people that hold gold to move to Bitcoin as well. Because what you will see is when we touch this black line, is a good time for Bitcoin, and this is a comparison between Bitcoin and price. So we're in a good position for gold to start to be rotating to Bitcoin. In short, this is the ratio between the Bitcoin price and the gold price. This is blue line. I've just used a log scale to just draw this line to show that this basically follows a power law, which power law, as I said many times, they have an amazing predictive power. And in physics, we use it all the time, actually. I know for some people in finance, it's something that they find difficult to believe, but in physics, it's everywhere. Anyhow, what that says is that gold is at a point which needs to start going down, basically, and money are going to move to Bitcoin. To be honest, I don't have any gold position. I posted this 3 days ago. And if I go and check the gold price, I don't know what it is, to be honest. gold price today. And yeah, it's going down, which, as I said, it made sense. And it's better for me to take decisions when I have math. Anyhow, moving forward, I said many times that I want Bitcoin to hold these values, the 80K value, when we have all this weakness, because I have countless data and indicators that I use that tell me that Bitcoin is undervalued and it just needs a spark to move to higher valuations. Our unique quant risk model, which basically did an amazing job through the years and basically captured all Bitcoin tops, even the recent one, which we had in November when Bitcoin was at 98K, now is flashing that the risk level of Bitcoin is 28.9. And this value is usually signaling that we are in a good position for an upside. So that is why you will see also in my blog, which also I'm sharing what I'm doing, that you'll find on the last two ones that I said that I bought the dip every time. For example, here you'll see at 80K, of course, not financial advice. And I explain in detail why I did that. And moving forward, also the short-term bubble risk is showing that we are undervalued. So when we are below the green line and we are in a bull run, that is an amazing time to start considering Bitcoin. Moving forward, also the profit and loss is telling us that selling pressure is reduced on Bitcoin because 20, let's say 3% of the supply almost is at a loss now, and therefore they are not incentivized to go and exit and sell some of their BTC. And that is good news when you are at the Q2 of 2025, which generally is a good period for BTC. Moving forward, I can go on and show you, for example, what whales are doing. You will see people that are holding 1K to 10K BTC for the since February 27. They are basically accumulating non-stop, and we can see that on the data. Also, people with 100 to 1K as well. You will see they follow the same uptrend momentum. If you go and check the ETFs, also BlackRock is accumulating, and you will see. So that was the latest move. There are countless data that you can check and make a point. Also, Bitcoin power law shows that basically Bitcoin is trending now below its fair value. So Bitcoin fair value is at 92.6 and now we are at 82.9. I'm using the closing price of each day. So today's 4th of April. So today at 12 o'clock, we'll have the next data point. And in short, I have zero signs that Bitcoin top was in. I don't think, and I never said that I believe that we have a left translated cycle, as many think. But of course, this is what I believe. From last year, November, when I made the interview with Giovanni, I said that I believe the same thing with him, that Bitcoin top will come later this year and also at or maybe at the Q1 of 2026, because we have this uncertainty with tariffs and the Fed, and they have delayed the QT ending, which is crucial. And also global liquidity is on the rise, which is an environment that Bitcoin is thriving. Now many of you ask me about altcoin season, and I tell them that yes, I believe we are going to have an altcoin season, but when the time comes. The risk now, this is what I'm doing. I have 90% of my portfolio at BTC in only small amount in altcoins. And when the time comes, I'm going to pick my winners. I already have the list like Solana, Aave, and many other coins that they show strength in these difficult times. But of course, because they are risky assets, they need their specific period, which lasts between 3 to 5 months to thrive. You will see when you have this red line above the purple one, this is where you want to be in altcoins. And when the red line is below the green line, you want to be on Bitcoin only. It's simple as that. So do not try to always try to cut your losses, try to DCA all the time into alts if you are not studying them very well. If you are someone that spend hundreds of hours and understanding the potential of a specific altcoin, of course you can take the risk. But for day-to-day people, which they just want to log in, for example, into the platform, check the risk of various coins today, go and choose their coin, see their risk level, see if now we are in altcoin season, because even if your altcoin has a low risk, for example, let's say like ADA, which is 20%, and we are in a Bitcoin season, there is no point for you to start moving to altcoins and put yourself in excessive risk. When you're starting to see this red line going up and coming closer and closer to the purple line, maybe it's a good time for you to start start to increase your risk tolerance and speculate more. But what I tell to people of our premium Telegram, which comes together with our premium package, which has thousands of graphs that you can monitor the whales, the risk levels, have an understanding of on-chain data, of off-chain data, of basically everything that you need, is that if you even simply go to just compare, for example, Bitcoin with Ethereum, you will see that since the bear market, you always be better on accumulating Bitcoin than altcoins. And that is evident from this simple graph. On April 2022, with one Bitcoin, someone will going to give you back 13.45 Ethereum. Now, if you go and give one Bitcoin to someone, you will get back 45.7 Ethereum. So that means that Ethereum is losing value compared to Bitcoin. And if you go and check other coins as well, you will see the same thing. It's the same story again and again. Anyhow, the point is made. I think this weekend is crucial for us to understand where Bitcoin is going. I think Bitcoin has the potential to move higher, and hopefully we're gonna hold 80K until the 15th of April. And every time that I see an opportunity, I notify my users in Telegram. I hope you liked the video. Please like and share it if you found value in it, because that helps us a lot. And until next time, bye-bye.